Mark, let's talk about the markets in 3 minutes. So you say it's sort of gently risk on, and we do see a lot of green on that board behind you there to support your point. Why do you think, what explains this risk on mentality that we have for markets? Is it still that we are looking ahead to a time where we get lower interest rates, as unclear as the timing around that might be? Next year, that seems to be increasingly the focus.
I think we're completely positioned for soft landing, and I think there has been a clear tailwind in the last couple of weeks for stocks to go higher. You know, we talked a lot about this in November, that there wasn't an average, an obvious catalyst to derail the risk rally until this Fed meeting. Perhaps CPI today, but I'm not overly worried about that. It is the Powell meeting tomorrow that I'm worried about. Now, I was saying since last week that I feel that we're on finite time for this rally, because you feel like the catalyst is tomorrow. And it looks like we're going to push that right up to the deadline of this stock market. I do think that the Fed meeting tomorrow is absolutely skewed to be bearish stocks, because the way financial conditions are so easy at the moment, it means that the Fed is being either forced to push back in those easy conditions and be hawkish, and that will be just hard for stocks in the short term. Or the only way they can validate having such easy conditions is by saying they're very worried about growth, and therefore they're supporting that kind of dovish pricing at the moment. So I think that the Fed meeting tomorrow is skewed to be quite negative for stocks, and given the current pricing, might be a bit more of a momentous bearish turn given where we've got to. But it does make sense that we've run up to here. There's not been anything negative yet. The negative catalyst is on the schedule tomorrow.
OK, so on the schedule tomorrow, and thinking about that then, Mark, what would you expect Fed pushback to look like? Will it all be in the summary of economic projections, the dots essentially? Will we see movement there, and that's how the Fed delivers on this pushback?
I think there'll be a number of ways we get a little bit of a hawkish surprise. None of them dramatic and outright, but I think they'll align. I think the dots will kind of not be as dovish as some people are hoping, and I'm worried about the tail risk of the long end dot being raised higher, which would cause a steepening of the curve and particularly upward pressure on the long end yields. I am worried about the forecasts are going to have to be pretty positive, and if they're not, if they suddenly slash their economic optimism, well, that won't be good for stocks either. And I'm generally worried that Powell over the past week or so, they've been stuck in the blackout period, but Powell will be alarmed by how easy financial conditions are. So I think his rhetoric will also be quite hawkish to make sure that investors get the message correctly from this Fed meeting.
FX in focus as well, Mark. We see a bit of dollar weakness this morning. Back to talking about Japanese currency strength.
Yeah, look, I think that because of my view going to the Fed, I think the bias in the short term is for the dollar to bounce tomorrow, in the same way that I think it's an asymmetric skew for stocks to get hurt tomorrow. But longer term, I'm not particularly bullish dollar. I just think that's the kind of short-term dynamic. And for the yen, I still think the BOJ will disappoint next week, but it's going to remain volatile right up until that meeting and after it as well.